Does your business ever have cash flow issues? Are you aware of the options available with Invoice Finance? Hello, in this video we'll explain how Invoice Finance works and the different options available to you. So what is Invoice Finance? If you're a company that sells products or services to other businesses, an Invoice Finance provider will in effect purchase your invoices and give you an advance on the money that's owed to you. This reduces potential cash flow issues and gives you access to the working capital you need to meet your own commitments. Once you've raised an invoice, you forward a copy onto your funder. They now own that invoice, and once they verify the debt with your client, you can receive an advance of up to 85 or 90% of the invoice value, usually within 24 hours. You now have working capital in your bank and no longer have to wait 30, 60 or even 90 days to get paid. Once your client settles the invoice, your provider will advance the rest of the funds to you, minus their service and interest fee, known as the discounting fee. Invoice factoring means the funder will take ownership of your invoices, send you the advance, and they take care of the credit control. Smaller companies tend to prefer this option so they can leave the chasing of invoices to their funder. This can also be kept confidential and is known as confidential invoice factoring. Invoice discounting is the same principle as factoring, but you retain the credit control. This is often preferred by larger companies that have their own accounts team. As there is less work involved, the fees for invoice discounting are reduced. If your company is still at an early stage but you would prefer invoice discounting, there is another option known as CHOCS, which means the client handles their own credit control. To qualify for this, you would need to show that you have the appropriate credit controls in place. Selective invoice finance is a great option if you don't need to finance your entire sales ledger. You just select the invoices that you would like to release cash from. You may have long-standing clients that always pay on time, but other clients may need longer payment terms or always seem to be late paying their invoices. Finally, we have single invoice finance, also known as spot factoring. This may be for a one-off invoice or if you have the occasional need to boost your cash reserves. This is popular with startups or companies without a long trading history, or by more established companies that are dealing with a new client or have an order with a lot of material costs involved up front. So, as you can see, there are many options for you, and Invoice Finance is a great way to boost your cash flow. For an example of fees, check out our other videos listed in the description below. Or just visit wisefactoring.co.uk, where we've made it really quick and easy to get an estimate in just 30 seconds without any funders contacting you. Thank you very much for watching.